Right then, buckle up, petrol heads, because we're diving into the world of Trump's tariffs. It's a wild ride through the economic landscape, and trust me, it's anything but smooth. You see, Trump, well, he's a businessman. Not just any businessman, but one who thrives on making bold moves and shaking things up. And like any good businessman, he likes to make deals. Big deals. Deals that he believes will put America first and foremost on the global stage. Problem is, he decided to make deals with the entire world all at once. Imagine trying to juggle a dozen balls while riding a unicycle. That's pretty much what he attempted, so he slapped these things called tariffs on goods coming from other countries. Tariffs are essentially taxes on imports, meant to make foreign goods more expensive and less attractive compared to domestic products. Think of it like this. China sends us a shiny new phone, Trump slaps a 25% price tag on it. That's a tariff. It's like adding a surcharge to discourage people from buying it. His reasoning? He wanted to protect American jobs and industries. By making foreign goods more expensive, he hoped to boost local manufacturing and keep jobs within the country. Make America great again, remember? It was all about reviving the American dream and ensuring that the US remained a powerhouse in the global economy. But like a dodgy gearbox, it didn't quite go to plan. The gears started grinding, and the whole mechanism began to falter. What Trump didn't realize is that messing with tariffs is like poking a hornet's nest with a stick. The initial poke might seem harmless, but the aftermath can be chaotic and painful. The rest of the world wasn't just going to sit there and take it. Countries like China, Canada, and the European Union decided to fight back. Oh no, they retaliated with tariffs of their own. It was a tit-for-tat game, with each side trying to outdo the other. Suddenly, we had a full-blown trade war on our hands. Markets were in turmoil, businesses were uncertain, and consumers felt the pinch. It was a global economic showdown with no clear winner in sight. China, being the big dog in the global economy, didn't take Trump's tariffs lying down. They were quick to respond, and their response was nothing short of strategic. They hit back with their own tariffs on American goods, particularly agricultural products. This move was designed to hit the US where it hurt, targeting key exports that were crucial to American farmers. See, China was buying a huge chunk of American soybeans, but with the tariffs, those soybeans suddenly became way too expensive. This wasn't just a minor inconvenience, it was a major disruption for American agriculture. It was like trying to sell a Ford Fiesta at the price of a Ferrari. The cost disparity was just too great for the Chinese market to absorb. The Chinese simply went elsewhere for their soybeans, leaving American farmers high and dry. This shift in the market had a ripple effect, causing distress and financial strain for many in the US agricultural sector. This tit-for-tat tariff battle went on for months, creating uncertainty in the global markets. Investors and businesses were left in a state of limbo, unsure of what the future held. Businesses hate uncertainty. It's like trying to drive a car with a blindfold on. You can't see where you're going, and every decision feels like a gamble. The stock market, which is basically a giant casino for rich people, reacted accordingly. Investors were on edge, and the volatility was palpable. And by accordingly, I mean it went completely bonkers. The market swings were wild, and the financial news was filled with stories of panic and chaos. The trade war had far-reaching consequences, affecting not just the US and China, but the entire global economy. Now, you might be thinking, Jeremy, what do soybeans have to do with my precious iPhone? Well, my friend, everything is connected in this globalized world. See, those tariffs on Chinese goods, they didn't just hit agricultural products, they hit electronics too. And when the cost of components goes up, guess what happens to the price of your shiny new iPhone? Yep, it goes up. Companies like Apple, Google and Microsoft, which rely heavily on Chinese manufacturing, felt the heat. Their profits took a hit, and their stock prices started to resemble a roller coaster designed by a lunatic. It was a stark reminder that in this interconnected world, what happens in China doesn't stay in China. Remember those soybean farmers I mentioned earlier? Well, they were caught in the crossfire of this trade war, China was their biggest customer, and with the tariffs, that market dried up faster than a drop of water on a hot summer day. Suddenly, they were stuck with mountains of unsold soybeans and no one to sell them to. The Trump administration tried to help out with subsidies, which is basically just a fancy word for government handouts. But it was like putting a band-aid on a broken leg. The damage was done. Many farmers already struggling with rising costs and low commodity prices were pushed to the brink. It was a stark reminder that in a trade war there are no winners. Section 5. Made in America. Manufacturing gets a boost, but at what cost? Now, it wasn't all doom and gloom. Some sectors of the American economy actually benefited from the tariffs, at least in the short term. Manufacturing, for example, saw a bit of a resurgence. See, with Chinese goods becoming more expensive, American companies started looking for alternative suppliers. And guess who was more than happy to step in? That's right, American manufacturers. But hold your horses, because there's a catch. This boost in manufacturing came at a cost. Remember those tariffs on Chinese components? Well, they made it more expensive for American manufacturers to do business. So, while they were selling more, their profit margins were squeezed tighter than a pair of skinny jeans on a hippopotamus. Section 6. The economy on a roller coaster, ups, downs, and holding on tight. So what did all this tariff chaos mean for the American economy as a whole? Well, it was a bit of a mixed bag. On the one hand, we had low unemployment and decent economic growth, but on the other hand, we had this trade war creating uncertainty and volatility in the markets. It was like driving a car with one foot on the gas and the other on the brake. You're moving forward, but it's a bumpy ride. And let's not forget about the long-term consequences. Trade wars have a nasty habit of hurting everyone involved, even the ones who started them. Section 7. Don't panic, it's just the market. Keeping a cool head amidst the chaos. In the world of investing, it's easy to get swept up in the frenzy of the market. Now, I know what you're thinking, Jeremy. This is all very well and good, but what does it mean for my hard-earned cash? And that's a fair question. The stock market can be a scary place, especially when it's behaving like a runaway train. But the most important thing is to keep a cool head. Remember, the market goes up, the market goes down. It's like the British weather, completely unpredictable. One moment it's sunny, the next it's pouring rain. Don't make rash decisions based on short-term fluctuations. Instead, focus on the long game. Invest in solid companies with good fundamentals and a proven track record. And if you're unsure, talk to a financial advisor. They might not be as entertaining as me, but they know their stuff. They can help you navigate the choppy waters of the stock market. Remember, investing is a marathon, not a sprint. Patience and discipline are key. So the next time the market takes a dive, take a deep breath, stay calm, and stick to your plan. Because in the end, it's not about timing the market, but time in the market that counts. Stay informed, stay patient, and most importantly, keep a cool head amidst the chaos. Your future self will thank you for it. They might not be as entertaining as me, but they know their stuff. Section 8. To invest or not to invest? That is the question. Now, you might be wondering, Jeremy, should I be buying stocks, selling stocks, or hiding all my money under the mattress? Well, as much as I love a good mattress, I wouldn't recommend that last option. The key is to stay informed and make educated decisions. If you're a long-term investor, the current market volatility might actually present some buying opportunities. Just remember to do your research and don't put all your eggs in one basket. Diversification is key. And if you're feeling a bit risk-averse, there are always safer options like bonds or index funds. Section 9, the tariff tale lessons, learned and looking ahead. So there you have it, the story of Trump's tariffs and the stock market chaos they unleashed. It's a tale of unintended consequences, political posturing and economic uncertainty. The main takeaway? Trade wars are bad for everyone. As we move forward, it's crucial to remember the lessons learned from this tariff tussle. Global trade is a delicate ecosystem, and disrupting it can have far-reaching consequences. Let's hope that in the future, cooler heads prevail and we can all get back to doing what we do best, making, selling, and buying stuff from each other. After all, a world without trade is like a world without cars, slow, boring, and utterly pointless. Comment your thoughts below and let me know you what think. Be sure to like, share, and subscribe. Thanks for watching.